Good morning, good morning, good morning. Hopefully, you guys are having a phenomenal Wednesday. It's been a long weekend. I am excited to get back trading, to get back on stream. So, we're going to be watching the markets today. It looks like we're in a sell model, if I'm honest right now. If you look at the 5-minute, it's a drop, pop, drop, pop, drop, pop, drop, pop, all the way down. My target's going to be this 1 hour fair value gap, which we have some equal lows sitting right above it. If you look at the 15-minute, right here we have some equal lows, relatively equal lows, and this is a fair value gap on the 1 hour. So that looks like this. Boom. Equal lows with a 1 hour fair value gap. We've closed below this 4 hour and 1 hour. So that is, and then if we really have the mustard, maybe we hit this a previous day low. So that's where we're sitting right now. That is where we're sitting right now. I'm going to close my door here. Summer school. No, summertime. Kids are all home. I'm basically just going to be looking for an entry to go short. There's a possibility that we hit this breaker, which I would love, but we are only 30 points away. I guess we're not that far. The NASDAQ can move 30 points in a flash, so that's not unrealistic. Made some equal highs right here with a fair value gap. I'd like that to be touched back into. Here is this is a low probability breaker. We have a high, low, higher, high in regards to close and wicks. And then we broke below it, made some lower lows, and then we came back and what are we running into? This down close candle right here. But just this is low probability altogether. However, if you look at it in the context of a market maker sell model or a sell program that the algorithm gets, then that's an entry formation. That's an entry that you could potentially take. Three minutes till open. nothing. If we can't reach, well, I guess that's way up there. I would love that 15-minute to be tagged, but if we can tag this 15-minute, that would be really. I was hoping for this 15-minute to be tagged, but we didn't. We got equal highs right here. Opening is happening. We got this level here as far as a high, low, higher, high. We have this high, low, higher, high as well. So I want to see how this candle reacts here. I really like this. I'm not looking to go long. I'm ideally would love this to be hit. If we just plow right through this though, let me go down to the 1 minute. We've dumped so far though here, guys. We have a lot of room to fill this opening range gap. There's a lot of potential draw to go higher just to fill some of this up. I mean, usually I call out about 50% of it. 50% of it comes out to be about here. I like the way the 2 minute looks because this is the low right here. Breaker is the down closed candle. I like the way that looks right now. Better than the 1 minute. I want to see if we find some resistance right here. We have hit resistance here. I mean, because of how volatile this candle was, you could get in short right here, but you may wick higher than 10 points and come back down. So I need some, we could just start dropping here too. This is the 5 minute fair value gap that I'm watching. That 5 minute, that's where the overlapping of the breaker is. And so we're staying on the discount end of this fair value gap. So we're looking for a short right now. We're looking and waiting. We're waiting for the market to give us a short. That's That's what I want. I don't want to go short right off of this because we could just keep going. I mean, when you have a giant candle like this, so I that's already 20 handles if I would have taken that entry. But it's hard to take something when you have this large of a green candle. It just, your risk, it just doesn't make sense to want to do something like that. Now, if I can reasonably predict, and I through back testing, that something like this takes place, which I have seen, then I would get more confidence to go short on a stab up like this. But we didn't even reach the ideal level that I want, so that's why I'm going to wait. Now this candle right here tells me we're still bullish. If this in fact closes green, this is a bullish signal. How long are we going to be bullish for? Don't know. It could just be up to right here. It could be all the way up to this 15-minute fair value gap where we have these relatively equal highs. This, this plateau right here. This shelf, call it. Let's see what price wants to do. But we got some range on these candles. This candle is in itself 20 handles and or more right now. Okay, so I can't, even though I want to go short here, I can't. This candle does not say, well, now it's a little bit better, but before that, this candle was not saying, before it was saying I want to go higher. We have an extended wick with a full body close higher. I mean, we're delivering off a 1 minute fair value gap. I mean, that's bullish. So to want to say you want to go short with that, the higher time frame does support a lower move. And so we just want to, I want to see price show me it wants to hang around here and then start indicating to go lower. If it's going to go straight up and then come right back down, it's going to go without me. That's just what will happen. If we can hang around here, show me that we are finding resistance at this breaker, I'll take that. Your other option is you could play the inversion of this candle right here. See this wick? See those wicks? This is why. You might see this big red candle and go, oh, I need to get in. This is why. Let's see what the 1 minute looks like. We just tapped the 1 minute lowest down closed candle. That's attractive, but we are now pushing through this 5 minute fair value gap. Tells me we still want to be bullish, and we have reason to be. Why do we have reason? We have this opening range gap that I have right here. All right, so how do I feel about this breaker? The 5 minute looks good. I would like to see this 5 minute body close within this 5 minute fair value gap. If we close above it, it makes it less attractive for me. Now, I'm not going to go short on a stab down even though we have this fair value gap. If we close below this, I would not take that because we've seen these candles wick higher. So I want to see price give me more information. See how much wick there is right there? 10 seconds left on that candle. Are we going to respect this fair value gap? We respected this fair value gap. This small fair value gap. That's a lot of wikis. That's a lot of wikis, my friend. I'll wait. This structure, we need to close below this fair value gap. Ooh, on the 5 minute, we're respecting this fair value gap as well. But it could so easily want to just explode higher. There's not much for me to make a decision on right here. So we sit and we're patient. The best trades are the most obvious trades. I'm telling myself that. The best trades are the most obvious trades. For those of you joining, we're looking for a short entry. We're looking to go short towards this 1 hour fair value gap, which has some equal highs sitting right above it. We're looking for a short entry. Our opportunity on the 5 minute just really didn't present itself a way that I was comfortable taking. So we're looking for an opportunity to still go short we have a reason to go short. We just need to be careful because some of these wicks are really, really large. If you look at the 2-minute, which I like the way the 2-minute looked structurally, but look at these wicks. Some of these wicks are 82 to 99. I mean, that's a 16 handle wick. That is very concerning. So knowing when I saw this, it made my desire to get in less desirable because it could go against me very easily. So it looks like it's just going to drop here, and I need to just find my entry. There is not a fair value gap here. The only thing that you could do is if it comes back and taps this, we tag this fair value gap a little bit lower, so we swept these equal lows. Morning, Raul. Good morning, good morning. We're glad that you're here. Glad to see you, my friend. My upside draw on liquidity is this 15-minute fair value gap. Why? We got this shelf. It looks like a shelf. It's just flat, relatively equal highs, and a fair value gap sitting right below it. So we could stab in to grab this liquidity, rebalance this 15-minute fair value gap, and then we could look for a short. That's our other option. Do you see how that just touched that? I want to see where this closes. Oh, let's see, the 1 minute. Let's see where it closed lower. Good morning, Vital. Good morning, good morning. Everything wants me to go. I want to go short because it's my model, but price action's not showing me to do that. This is why you have to play draws on liquidity. You cannot play the model. Well, there it is. Why don't I get in? Because it's not telling me to get in. I can't explain it. If we continue to see bodies close below this, yes, that would change my conversation. But right now, this is too bullish. This candle right here, grab this liquidity here. It's finding support here. That tells me it may want to run higher. I mean, I just can't. We just closed above this 30-second. Let's see if it grabs this. On the 30-second. We have the 1 minute here, 2 minute here, 3 minute. 3 minutes been respecting as well. So we see reason it wants to stall, but I just don't have enough. That's another candle close below. We're going to try it.
Order filled.
I'm willing to take the risk. We had 3 candles close. We're going to take the risk. tight stop will be basically right above this. 801, that'd be 10. It's just going to be at these equal highs here. Yep, that. Yeah, I don't like that close.
Order filled.
That's what I'm saying. The bullish, see what happens there? As soon as it closed above that, that's why I got out. Oh, look at that. That's why. We had 3 candles that showed me potential that it may want to do that. And so that's why I was willing to take that chance. It's part of my model. It falls within line in it, and it didn't work out. We also had this candle close still within the fair value gap. Now we're almost at this 15-minute. We tag into this 15-minute. There you go. So we just tapped into this 15-minute. Remove this here. All right, so now that we have hit, let's pull this 15-minute up. All right, so there's the 15-minute. Do you see these relatively equal highs here, here, and here? And then we have a fair value gap right above. I can tell you reasonably this will stall. It will at least stall here. I would like to see a reversal here because I think, well, I don't want to be so quick. I would like to be bearish. Let's just say that. So what are we doing right now? We're waiting. We're letting time pass. We need structure to form. We just made a level of expansion. We need to find either structure that supports a higher move or structure that tells us it wants to go the other direction. Those are the 2 things that we're looking for. And this was my initial target for a reason for it to be drawn up to. So lesson I can take on this entry that I took. I did get out early, which I'm grateful that I did. But lesson that I can learn here, I mean, I think honestly it's odds. I mean, probability. Some of these work, some of these don't. This was a higher draw on liquidity right here as of right now. These relatively equal highs and this fair value gap was a higher draw on liquidity that I should have took more into account, especially with the support here. But for how many times we were hitting this, I just decided to take a stab. Now, as you're waiting, what do? We thumb through timelines, time frames. So overlapping that 15-minute is an hourly. We got a high, low, higher high. We got a fair value gap to the left, down close candle. If we get an aggressive candle on the right side, we've grabbed liquidity, we've rebalanced a 15-minute fair value gap. If there's momentum to the downside, that would be reason for us to look for a breaker. Good morning. Good morning, BF. Glad to have you this morning. Today is a beautiful Wednesday here in Nebraska. Sun's out. Nice weather today. The reason why I'm looking for downside and not upside is look at this structure here. Structure is a market maker sell model. That's how I see it. I see this as a market maker sell model. So even though I'm bearish, I still have to wait for a reason. We also have here a smaller time frame market maker potentially sell model. We have our consolidation, reaccumulation, and this could be our smart money reversal up here to re-engage these lows and target the previous day low down here. So these are the things that I'm watching for. Now, because of how fast we went up, I kind of want to see that on this side of the charts. And we got 30 seconds before 10 o'clock. So the thing with these sharp curves is that sometimes they won't go back up and touch the fair value gap or touch the breaker. But we'll see. We're finding support here. All right, so the 1 hour closed in its 1 hour fair value gap. 15-minute closed below it as well. And then we got 5-minute right here that also didn't get violated. Hardest part in day trading is right here, is waiting. Is being patient. Not revenge trading, not trying to make up for a potential loss. It's waiting for a legitimate reason to put risk on the table. All right, so if this fair value gap is not closed, ideally I'd like that to be that would stay open. We could target these lows over here. So two options for entries is if we close here in 18 seconds and we wick back up into this breaker, that's a potential entry. Or if we close below this large candle right here as an inversion, that's an option as well. So that is now closed. Doesn't invalidate the breaker, it just makes it less desirable for me right now. Watching the consequent encroachment of this fair value or of this wick. My biggest hesitation on not getting in right now is we have this opening range gap. Here's the opening range gap. Look how large this is. It's very large. We do have this price action here that technically makes this somewhat of a balanced price range, but when you got a large gap like this, it's hard to want to go against that potential draw. So like my confirmation that we go short is basically a close of this fair value gap right here. See these wicks? This is just price action that I don't want to get in until it decides which way it wants to go. So one thing that I'll tell you is, see, look at this candle, but look at the time. It's 45 seconds left. That could change. If this was like this with 15 seconds left, that makes it more interesting to me. Now, this still could be a nice downsized candle, but we are just too far away from the close of this candle for me to want to start making assumptions about what this means. Let's see. This is 810, 832. That's 20 handles, 22 handles. We'll see what happens with the close. Here's this. Okay, so we didn't close it. We're still in premium. We've swept liquidity. Let's run through these. We've swept liquidity. We're finding displacement down. We do have a low, high, lower low here, which it could find resistance here. That's why we want to see this break below this, because if it doesn't, then it's going to find support in this fair value gap and this breaker, a version of a breaker, and it could begin to move the other direction. This is why we wait for this close below, because we want to look for violations of discount PD arrays. and support of premium PD arrays. Right now, it's supporting this discount PD array. Why is this a discount? Because it's going down and it has to go through this to continue downwards. So this is, if we're moving towards discount, anything that's in its way is considered a discount PD array. This is a nice candle though. If we close here in 23 seconds, you could target the swing high.
Order filled.
I'm going to take this long right here towards this wick.
Order submitted.
Move stops. My stop is at break even. If it's not going to go, I'm not going to lose money. I'd rather be stopped out at break even than lose money on it.
Order filled.
So it tagged me, and that's okay. The rule is you don't move stop to break even until you hit this, but because I already have a loss on the day, I'd rather be extra careful. So let's see if this plays out. More than likely, it's going to play out. Yep. That's what we played, the break of this fair value gap after it stabbed lower and went aggressively back the other direction. Your stop technically would still be down here. A close below this would make it invalid.
Order filled.
I don't know what that is. This is suspect for me. It should run this. The only reason it wouldn't is we've already ran liquidity once, but so not in this, but I was just looking for a little bit faster push. That's why I brought my stop loss to break even quicker. All right, there we go. All right, stops to break even or you're scaling. John, do I use the 1 hour? No, I can't say I use the CISD on the 1 hour. I probably use more lower time frame, 5 minute, 1 minute, 15 minute. 1 hour, I'm looking for just direction on price. So stop should be at break even or you scaled, because we don't have to go back to these highs. We can. I wish I didn't get tagged out because it didn't even, did you watch that? It really didn't even go back down. It's just like it decided to liquidate me. That was irritating because physically the candle didn't go down there. Because that would have been 24, 37. That would have been 13 handles. That would have been a nice one. If you're looking at the 1 hour, John, 1 hour. Now, if I remember the rules correctly, we need to have a closed book above this candle, correct? Just to refresh. I'm pretty sure this would need to close above. Or is it just a wick above? Because to call this a order block, this candle would need to close above the wick high. Close above and then a retest of the 1 hour order block body. Got it. So this one didn't close above yet. And then a retest of this candle. So if this closed above and then it retested down, that would constitute a market or a change in state of delivery. Yes. See how it doesn't have to hit this? It still could. It just could pop right through it. But see how it's taking its time? It's taking its time because it's already grabbed this level before, these highs. And when you have a long-standing intermediate term high that price needs to go and grab, it runs. Look how aggressive this ran right here. It didn't take time. It took time down here to trick you, and then it explodes and gets there quickly. Look how we come lower, and then look how slow this wants to go. Yeah, I could see that. The only thing I'd have to say about that is this could be this price action right here. This could also be internal. This could be an internal play right here and then reaching for external down here. So yeah, it's like there's so many different ways to look at it. It's just what is the most obvious? What's the obvious draw on liquidity? And initially, going back at this breaker that I took, this 15-minute was the most obvious draw on liquidity. This 1 hour and 15-minute, we had relatively equal highs and a fair value gap. That was the most obvious. So really, I should have not taken this breaker entry that I got in right here. I got in right here. It didn't go short. I got out, and guess what happens? It explodes higher. That's a good answer, John. If you can frame a trade either direction, low probability. I like the probabilities of us going down now that we grabbed liquidity and we've rebalanced a 1 hour and 15-minute. However, current price action is not showing that. So it means we need to sit and wait. We got equal highs. I like this candle. Let's just see. See now, look at the time on this candle. 18 seconds left. 18 seconds with an aggressive push lower. That makes this attractive to me. So an SMT on ES. So there's the high we broke on in Q and we didn't make it on ES. Yeah. Now, the only thing I don't like about this candle going down and us going down is what did we leave behind? Freaking, we left equal highs. Equal highs, it's hard to want to run against them. Why? Look at this. What did we do before we went the other direction? We stabbed through the equal highs and then we left. If we leave equal highs, this could be viewed as a manipulation. So I would have rather seen a pop, stab through it, then retrace, and us moving lower. That would have been preferred. If you go down to a lower time frame, you might think to yourself, why did this 1 minute stop below it? You could say it was this bearish order block. If you go down to a 30-second, you'll see this really small fair value gap. Right here. It's basically been respecting that 1 minute, 30-second fair value gap. So this is why price is fractal. You could play this on a 30-second, you could play it on a 1 minute. But I can't, even though I want to go short, we have these. We have these relatively equal highs. See that? Let's go for this.
Order filled. Order filled.
All right, did you see what I just did there? I mean, did you see that candle? Sorry, I mean, when you have that type of candle and it pauses right before there, and the time was really close to expiring, and we have these relatively equal highs, I'm going to get in, I'm going to wait for the push, and then I'm going to sell it. I can't, I mean, I just have seen it. too many times. Look how aggressive this candle is. I mean, if I could, do I have this? I'm not recording this. Yeah, induce everybody to go short. That's exactly right, John. Left these equal highs. I'm like, I want to go short, but what did it leave? It did not purge liquidity before the move. We have relatively equal lows here. Price decides we're going, pause, grab it, and then it runs the other direction. Okay? That is not what happened with this high right here. High, aggressive candle lower. We pause at this fair value gap, and this next candle aggressively goes higher. It pauses with like 6 seconds left here. And this is a large candle. The chances of it not hitting this is really low. I'm going to get in. It breaks it. I'm going to get out. Now, the reason why I get out is because it could literally flash up, grab this, and then run the other way. We don't know. So you just take it for the quick play. Hopefully that makes sense. Does that make sense for you guys watching? Give me a 1 if it makes sense, 2 if it doesn't make sense. Okay, sweet. Breaker right here. Let's see, we got a low, high, lower, low. Yeah, let's look here. All right, so this is equilibrium. That's equilibrium right there. I don't know if I would want to go long because we're tagging equilibrium right now. Does that make sense, John? Yeah. Yeah, it hit opening range gap, and look at the 50%. Look how we didn't even close above the 50%. Now, I'm not saying we can't go higher. Discount zone at 930. Yeah, you could. Are you looking at tell me what your breaker high is, Raul. Tell me what the breaker high is, because I was looking down here and I didn't see what I wanted to see. Tell me what you saw. But going back to this, if we go to a higher time frame, this is the 1 hour. From this high to this low, we've hit this 50%. If we take this higher high, look where it hits. I mean, we're almost to the tick right here. Look at that. Isn't that insane? From the highest high to the current low, 50% is tagged to the penny. To the penny. You're looking at the 5 minute. So that tells me I don't necessarily go long. Wait for more information to see if we want to push through this 50% level. 5 minute breaker. Okay, so the breaker that I see that you're referring to is this 910 candle. The 910 candle never came back and it never touched. You could have taken this candle here, this high, so we have a low, high, lower low. What I didn't like about this is at this point in time, in 935, we saw these giant wicks lower and wicks higher. And there's too much volatility for me to actually do something. Let's see, 5-minute bearish breaker. Where do you see that? Oh, I'm not seeing your bearish breaker. I'm clueless here. I'm missing it completely. There's a bearish breaker here on the 1 minute. High, low, higher, high. And there was a bearish breaker right here. I started streaming like 9:16. It was like right here. So I missed this opportunity, which looked legitimate. It just didn't have a fair value gap on the left side. And it had one on the right side. But the other thing that I'll mention is that we were in a sell program from what it looked like. This sell program was attractive, so this would work. High, low, higher, high, break lower, come back, find support here for a further move lower. That's why I'm like, okay, we're respecting premium arrays and disrespecting discount arrays to move lower. So that would have been a potential entry. John, I was looking at the 10-20 bull candle as a breaker on the 1 minute, 10-20. Yes. There's another trader that would have potentially taken that. The only thing I don't like about this one personally is I would have, it's to each its own. We're delivering from a fair value gap. I would have loved to grab liquidity and do that. If we would have grabbed liquidity and broke higher, I would have liked that. But this also supports, the higher low theory that we're in a trend to move higher. So I like that. It definitely can work, and you hit the breaker to bounce off of. So when you have a large fair value gap like this, right, that's what you got to look for, is what's to the left of this fair value gap in structure that supports. So I do like that, John. The answer is yes, if we're on the right side of the move. I've seen these happen, and then they just get broken right in because its intention is to go lower. The most probable BPRs are those that grab liquidity. So if this would have grabbed liquidity and it did that BPR, that is a very bullish signal. That's a very bullish signal. All right, let's see how high it wants to take this. We're still hanging out around this 50% level. We got liquidity here and a fair value gap here on the 5 minute. So we have this high and this high into another fair value gap sitting above it on the 5 minute. Let's go to the 15 minute, see what we got. I like this high better on the 15 minute. Let's call that a 15 minute. Do I have a 15 minute on here? So it really depends, John. Are we in a bullish market or are we in a bearish market? We're at all-time highs. If we're at all-time highs, you cannot try to fade all-time highs. So you always have to consider the bullish side of things because it wants you to think that the high has been put in and we're just going to drop. But then what does it do? It does crap like this. It just blows right through your analysis and it disrespects all of the premium arrays. So I like these multiple rejections here. We're coming up also on the 11 o'clock macro. If price forms, we grab this liquidity, we support this 5-minute, and we get displacement to the downside, I personally would look for a short because we're also at equilibrium as well. We're also at equilibrium from this entire leg lower. So because of that, it gives me more permission to look for a short. So why did I look for a short down here? Because when you're in a sell program and price has a set of instructions, it may not retrace all the way back up here before it wants to go lower. That's why I was looking for a short down here. Retracement to the EQ, which happens to be MOP and LOKZ high. I don't know what MOP and LOK is. Not right now. When I'm done, I can cut it for you. Yeah, but not right now. Midnight in London. Yeah, got it. All right, so 5 a.m. So these are midnight. Where is midnight? How did I not put midnight on here? All right, here we go. So this would be, this is midnight open. Midnight open is right here. You cannot just go short with seeing this. We need more context. Yeah, going back to your comment, John. Was trying to figure out what I'm looking at here. Your midnight open, equilibrium, all is sitting around the same level. That is a reason. That is something to consider as well. It's not something I would not use it as my draw on liquidity, but I would use it as a reason for why we could run the other direction. Does that make sense? We use it as additional confirmation. So we grab this high, we grab that high. We close to the midnight open, we tag the midnight open. All these add to the overlapping, not coincidences, things that are coinciding with each other. So the more we have that are overlapping, that gives us more conviction that we potentially could be going the other direction. Sorry, I have to cough. Look at the bodies closing below this. We could easily just pop right through that, but it's something I'm noting. I'm cleaning up the chart here. Okay, so what I'm looking at right now is I'm looking at this candle right here as our breaker, our bearish breaker. That's what I'm considering this candle right here as a bearish breaker. Why? Time, we're a little bit before the macro. We've reaching into a fair value gap. We could stab higher. This also could be our breaker, but I'm looking at this as the breaker right now before it's actually a breaker. This is the story I want to see play out. I will be right back. I'm going to use the restroom. All right, I'm back. Did I miss anything? Anything form? Nope. Just sideways chopping. Sideways chopping. So going back and reviewing the price action for today. Have we seen an obvious and clear breaker this morning? Besides the pre-market one, which you could have played, but even still, that's not as clear because we were really far in discount. So I do not see an obvious and clear opportunity for a breaker compared to yesterday. I mean, look at yesterday. I wish I was on yesterday. I have an office meeting that I lead for realtors, and I wasn't able to do anything yesterday. But look at this. I wrote it out because I'm like, this is what I'm talking about, guys. This is what I want to see. We have equal highs here. We stab above them, and after that we start dropping. This is the stab of liquidity I'm looking for. We stab that liquidity, and then what do we leave behind? We have a breaker here, high, low, higher high. We also have this fair value gap right here, high, low, higher high. However, this candle right here breaks below it before we get this higher high, and so we really had no setup at this point. So immediately my eye is drawn to this. These groups of down closed candles overlapping fair value gap. There is not one on the right hand side. So this is this is a type of breaker. We see price break below this, and then it comes back up to it. Stops, and then look at this drop, my friends. That's 72 freaking handles. 72 handles in 10 minutes. 72 handles in how many? I don't know. 1, 2, 3, 4, 5, 6, 7. 8 minutes. 8 minutes, 72 handles. Guys, put this in the comments. Would you be willing to take this one time a week? For me, the answer is yes. Are you willing to wait? I take that back. If my answer is yes, I shouldn't have taken that last trade. Not the last trade, but the breaker that I took. The clarity on this trade is so much more than what I took today. So the reality is I should be willing to be patient. Sorry, my throat. Sorry about that, guys. I don't know why I got some grogginess in my throat. I should be willing to wait for a move like this because the clarity on this and the to get 30, 40, 50 handles out of this, because ultimately my goal is to take 10 handles. That's 5 trades in one. 5 trades in one and in 8 minutes. This is the level that I'm aspiring to get to, is to be patient enough to wait for this type of move, and then patient enough to let it play out because of how clear the structure is. Stab of liquidity, break in the other direction, coming back up aggressively right to the stop, enter there, breaking lower. That, my friends, is the move that I want. The downside to moves like this is it makes streams very boring because you're literally going to be sitting here and just waiting for stuff to happen. And if they don't happen that often, well, then we're just going to be chatting, which is fine. I mean, our real trader needs to be able to have the patience. All right, so what did we do? Look at this. Remember I called this the breaker? Well, that breaker got extended. So this is still the breaker, fair value gap, higher high. Let's see what this candle does right here. Let's see what this candle does right here. Now, here, I like this candle and this candle. Making this high, this would be considered that BPR. Let's see if this wants to hold that BPR, if this really wants to be a BPR where we actually respect. So moving lower, grabbing liquidity. Two-minute looks better. I like the way the 2 minute looks. What is the 3 minute? 3 minute, ugh. That wick throws things off, man. So you got 2 minute. Let's see what price wants to do. So on a 2 minute, we don't have a BPR. On the 1 minute, we do. Look where this low is at. It's at 1046. 1046 for my macros that I've watched. ICT's macros are from that he put on there was from 1050 to 1110. I expanded that from 9 to 45 to 15. And the reason why I did that, I started seeing that a lot of lows were being formed, significant lows were being formed within that time frame. So I do mine from the 45 to the 15 time, so that's 30 minutes total that price can actually move in. Right now, I want to see, I was just about to say it, I want to see an aggressive candle right here, and I would like a fair value gap to be left. That's what I want right there. This is what I want to see right here. Why I want to see it come back up into this fair value gap. I don't want it to do it yet. It could, and you may have to consider taking it sooner. We got 3 minutes left, or 3 minutes till the top of the hour. Buy side swept. 26 seconds left on the candle. Literally looking for a tag into here, and I will go short. As long as it doesn't close. I don't like it. I would prefer a down close candle. That's not less attractive here. Less attractive here. when I do my analysis, when I see a market structure shift, or when I see the market structure shift, 9 times out of 10 they're red candles. This is a green candle. I don't like that. We also didn't come up into this fair value gap yet. If it comes up into this fair value gap right now, I probably am not taking it. I don't like this green candle. We closed at that. This technically would be an inversion with a stab. But we just grab liquidity, so I'm not interested in higher prices. But more than likely, we'll probably hit this right here. If you took this inversion, which it closed right on it, your stop loss would go to break even once we hit this high right here. Stop off to break even, or you take size off. We have a fair value gap right here that we may not break through. If we break through it, we will go for these highs again. So stop would be at break even. Your break even is right here. So if I'm playing this out for you guys, it would look like this. Stops at break even right now. Target would be here. So why am I not in this? I'm not in this because equal high, or we tagged the highs, we broke the higher high, we respected this 5-minute, and we technically made an ICT market structure shift, but I didn't like this candle here. I wanted it to be a down close candle, and I would have taken this, but it was green. And most of the time, I track these, that this candle is usually red when it breaks. It wasn't this time. So you can play the short play, but there's a reason why I didn't want to go long. Technically, this is the down close candle right here, and the bodies have respected this down close candle, which is the breaker. So this breaker is still valid. Okay, so stop would be at break. I mean, you'd have been stopped out on this play. Now see how messy this is getting? It makes it less desirable. This is the magic fair value gap, though. Look at that. At 1, 2, 3, 4, 5, 6, 7, 8, 9 times price has entered this fair value gap, and it has found respect on the premium side of that fair value gap. The premium side is the top half of the fair value gap. See that giant wick right there? Makes it look like it's going higher than it closes. Look at the bodies. The bodies are telling us the story. But this is a hot mess right here. When I showed you that trade from yesterday, it doesn't look like this. That's why I mean it's less desirable for me. The London high would be this level right here. Whoops. This is the London high, which comes in at, what is that? 18,888.75. That'd be the London high, which also is in a 15-minute fair value gap. Five-minute looks nice and clean. What happened here? We grabbed liquidity. We closed here. We opened. We dropped down into another 5-minute fair value gap. And then we pushed higher, grabbed new highs, and then closed here. Now we went higher first. Now we're coming down and closing lower. So this is the structure on this. This is a 15-minute, excuse me. This is the structure where price could actually find and come back up into our breaker. Okay, so let's see how this closes in 30 seconds. We're more than likely leaving a fair value gap here unless it just wicks back up like the previous candles. Are we grabbing these? We made equal lows here. I would love for it to not go any lower. Okay, so it's just this is your breaker. Who was that, Raul? Was that you or you, John? This is your 10-20 breaker. Right there. $30 seconds. We want price to come back up here. This would be a really messy breaker. We're still within our macro. We're also in a 15-minute fair value gap on the right here. It's finding support. I mean, I like where this candle's coming to. It's rejecting that. We'll probably get some type of pop here if we're bearish. But we do have to consider that 15-minute high, or that the London highs for sure. Because that could, if that is the draw on liquidity, that takes away the downside move that we really want. I like the way the 4-minute looks. Look at the 4-minute. High, low, higher high. Fair value. No, that's not a fair value gap. So no fair value gap on the left side. Fair value gap on the right hand side. But it looks like price is just going to move without us. Okay, I'm now seeing the breaker you guys are talking about. High, low, high, lower, low. Right there. I understand what you guys were talking about before. Yeah, I mean it's running without us. It just didn't give us the entry. This was more of a model 2022 from ICT. We break lower, it comes back up into this fair value gap right here, and this would have been your entry. So that would have been, this is a good example of a model 22. I don't trade model 22s as often. But, I mean, this one looks nice. High, low, higher, high. We break low, market structure shift, retrace back up into the highest fair value gap. And then our bodies close within the discount portion of the fair value gap, and then we move lower. Now, what I've seen is for these model 22s, even though we have the move, we can still see price come back up to here and form the breaker right here. We got 3 minutes left on this 15-minute. I would like to see it close below this fair value gap. If we were to look at this as, let's see, we're on the 1 minute. What does a 3 minute look like? No. High, low, higher high, break below. This could work as a breaker as well. Fair value gap here from the swing low. Fair value gap here. I like. We finally have some resistance here with another high, low, higher, high. Let's just see if it doesn't. Let's just see if it wants to reach back up a little bit higher. You can see it here on the 1 minute. It hit these low. It hit this right here. For those of you join in, if you're just joining, we're looking for an entry, a breaker entry for the downside. We're beginning to see the structure form of a market maker sell model here. Because we got so much potential room, I'm not worried about it being right here. If it goes without us, it goes without us. I would love to see an aggressive candle to here for an entry. $18 seconds before we close below this 15-minute fair value gap. So we're probably closing below that. We're leaving a 5-minute fair value gap right here. So look at this. We left this 5-minute. This 5-minute is left. What did we leave behind? We left this fair value gap. Many times you'll see the 5-minute want to come back up and tag this 5-minute fair value gap before it wants to move lower. So we just closed below this 15-minute, so let's take that off. We'll leave these 5 and 15 minutes sitting up here for right now. We'll just move them a little further away because we know that they're there. But this 5-minute is of interest. Why? Because we really want to see price come up in here anyway. We want to see price come up in here, ideally touching some of these levels up here. It doesn't have to. It could just do an institutional order entry drill, stab into here barely, and then continue lower. But I will wait for this to be, for us to come back up into this fair value gap. That's what I will wait for. Thanks, Raul. I appreciate it. We'll see you later if you're headed out. Yeah, that's awesome. Yeah. The market maker sell models are like that structure. And here you can see it play out. I talk about this. You can take this low right here. That is a signature in price. I don't take this normally because I've seen price come up well beyond that in the past. But this is a signature that you know that we're in some type of sell model. So maybe it's down to this low. That would complete it. Here's our initial consolidation. reaccumulation, smart money reversal, redistribution, and then push lower below this. On the 15-minute, do you view the 8 a.m. candle as a breaker? Yes, I would. On a 15-minute, what you would have to do is we need evidence that it doesn't want to go lower. So what does that evidence look like to me? It means we don't break some of these lows. If we break some of these lows, I would say we see lower prices. We also want to see it respect the body. This is that level there. Let's change that green so we know that means bullish. Is it this breaker right here you're talking about, Raul? The 1004. Yeah, I mean, there's reason for you to. Many times you'll see on both sides, it'll hit a breaker and then bounce the other direction, and then it could come up to this level here and then run the other way too. Right now, but we don't have any type of fair value gaps right here. So they're outside of getting in when it hits this breaker, there was not an entry. So, I mean, you could have done that on this opportunity. You could have made some money, but we slowly degraded or took away from that. And then how low do we go? Don't know, but now we're bouncing. So really, I'm looking at this level here. I've seen the price come up to these distribution areas multiple times. Yeah, I don't like. I know a lot of traders will look at the Dow and as how it coincides. I don't like it. They are different. So if I'm gonna do SMTs, I'm going to compare between ES and NQ. That's my personal preference. 18,755. What is 18,755? So BF, you're looking at a long to go to that level? I would say before, I would be interested in that level if we close this 5 minute, if we inverse this 5 minute, and if we inverse potentially this 1 minute right here. So there's our stab into the 5 minute breaker right there. This would also be, I'm not ready to take a short yet, but that is, I want to see how we close. We got 30 seconds left on that candle. The only so if we're gonna close, if this the London highs are the draw, then the way I would do that is on the close of this 5 minute. How much time, BF? I know that it can provide some delay. And if you put your time in on like 1.5 or 1.25, it helps prevent some of that delay. All right, so I'm waiting for a swing high to form. I want a swing high to form. So 3 candles. That was a very bullish candle right towards the 50% level, and that was also the close of the 5-minute. So we have 5 minutes left before we are going to consider going to these highs. But this absolutely has the structure for us to go higher as well. I like the idea of a long right here, to be honest. This is where price would turn if it's going to. It's 10:26, middle of the macro, or middle of the, so we're not in a macro, I should say. I think I am leaning bullish, guys. I'm looking at higher time frames, and it's, if you look at the 4-hour, it looks bullish to me. Where we're supporting the premium side of the 4-hour fair value gap. We have 2.5 minutes left on the 5-minute. I don't want it to run without me, and it absolutely could. We'll see what happens here. Well, how big is this fair value gap? 57 to 52. That's not bad. I may be willing to, on the close of this 1 minute. Let's see how price, I want to see how it forms. Four-hour fair value gap. Yeah, that's what I agree with you. I'm just reading your thing. That would have been an entry for your for a short. $47 seconds on this 5-minute. If we don't close there, I may be, I'm 50-50. We got opportunities for both ways, guys. Are you seeing that? Are you seeing this? I'm seeing the same. I mean, that's what I'm seeing. I see opportunities for both. and it doesn't look like it's going to close.
Order filled.
I'm going to go long right here, guys.
Order submitted.
We have a low, high, lower, low. So we have a breaker right here. I want to see if price wants to find support here. If I lose this trade, I'll be done for the day. Yep. 250.50. I'll probably get stopped
Order
out here, guys.
filled.
Yep. All right. There is my day. 1 for 2 on the day. And this still could, oh my gosh. Don't tell me you're going to wick me out and then go. I'd like for it to see, just blow right through me. Tell me I was completely wrong. I changed my bias because there's not a clear draw on liquidity in my mind for the downside, and it seemed clear for the upside. Just clear for me. But obviously it wants to move lower right now. So We are technically still in this breaker because of how big it is, but we got 2 up close candles. Well, guys, that's going to be my day. So thanks for joining me, guys, today. I'll be on tomorrow. We'll look for a better day. So thanks for joining, and we will see you guys tomorrow.